Litha Healthcare released its interim results for the 6 months ended 30 June and reported a 26% rise in headline earnings per share to 11.8 cents. The company increased its stake in the Biovac consortium to 85%.
Market cap for Litha Healthcare, 992 million. We've got a price earnings of 13.5%. Zero dividend yield. They're not paying dividend. Craig, Litha really, they're the new kid in the healthcare block. They've got some interesting stuff there. They're looking to move into generics. They've got their medical division, which is like MRI scanners and those sort of giant things we see there. I like them, but I suppose they're early, and that brings some risk to it. There's still a lot they've got to prove to us.
Yeah, look, I mean, it's a new story, but if you look at the growth, they've actually shown tremendous growth, and they're setting themselves up for some nice growth going forward. So one can't help but wonder what the prospects look like, and especially if you're trying to find a story to bet on for the national health insurance, I don't think you need to look too much further than Litha, because they've got that government partnership. The joint ventures certainly seem to have quite a lot of government support as well, and they're in that right space for growth.
Let's come to Yonatan now on the wall. Yonatan, it looks like we're in a consolidation phase with a negative bias on Litha Healthcare.
That's correct, Rafael. I think that most certainly there's two things that I actually want to be chatting about here. Even though that the long-term prospect or the long-term 200-day moving average is pointing upwards, something is pretty much happening since 2010 up until now. That consolidation period, to me, it has got that look and feel of a multiple head and shoulders top formation. So it's a top reversal formation. So we are looking for prices to move back down again. And again, on balance volume over here being my key driver. This is a precursor to a change of trend, and we can see all the way up from this huge rise of 2009 to 2011. It was confirming the uptrend that Litha was in, but only recently, since June, July 2011, did we have a breakdown on the on-balance volume chart. So at these levels, unfortunately, the smart money is leaving the stock.
Craig, bringing it back to you in Cape Town, we see inventories higher at 337 million versus 224. Trade other receivables also up at 484 million. We see operating margins down. They say it's the acquisition. Is that a fair shot? Acquisition, and also I suppose the fact that they're in that growth, they're getting increased sales coming through, and not to worry, particularly with inventories and receivables.
Yeah, look, I mean, their biotech division is largely importing. So what they've obviously done is they've tried to play the game in terms of getting the right stock levels when the rand was lower and weaker. And I think they've indicated that, and it's been balanced by higher accounts receivables because they've seen some of their sales come through before the end of the year. So they're obviously sitting on a bit of cash, able to purchase stock and hopefully move that going forward.
You mentioned biotech there. I mean, biotech inoculations, a huge story, and particularly a population story. I mean, as new babies are born, they get inoculated. They talk about moving into Africa. I imagine an incredibly low margin, but I imagine flip side is a business that, you know, as I said, every child that's being born is being inoculated. And again, it's that relationship with government. And again, it comes back to the national health insurance, which are already playing positive for them, even on a low margin operation.
Yeah, look, it's low margins now, but I think as they start manufacturing these vaccines, and they're talking about bringing others on stream as well, those margins will slowly increase, and hopefully that's the story in Litha going forward. And one doesn't know what population growth is going to be, so it is a little bit of a bet on population growth, and I don't like betting on that because you look at India and China and so on. Everything else in the economy goes well when populations increase, so I wouldn't want to just play the specific aspect of it. But I do think margins will improve going forward, especially as they start to manufacture. And
with that improvement in margins then, Craig, would you call it a hot stock?
I don't know terribly much about the company. I prefer Aspen and Cipla. And the company hasn't been listed long enough. But looking at what I see at the moment, in the terms of prospects, I certainly think it's worth a speculative buy. I don't know if I'd call it hot, but because there's an element of risk there. But I would probably nibble if I had cash and not too sure what to do with it.
Speculative buy because of the element of risk for Craig. Yonatan, how do you feel about Litha Healthcare?
Again, I think the range is getting a lot tighter to trade within. So it's at the moment, it's a 10% range between 275 high and a 250 low. So again, agreed with Craig, a speculative buy above 275. But if it does break that 250 level, I'd be looking to leave the stock altogether, remembering this is the precursor to a change of trend, the on-balance volume, and that's my key driver.
Simon, is Litha Healthcare a headache or a cure for all your ills?
I don't think it's a cure for my ills. I like healthcare. It's nice, it's defensive. And I got to say, Litha's not defensive because it's new, it's still expanding, it's still growing. And then I wonder, well, then why do I like healthcare? So I'm going to steal a bit from Craig there and say my pick would rather be Aspen, particularly in the generic space. And I would say rather Aspen. Litha, I know, folks, if Keith McLachlan is watching, he's going to shoot me. It's his top pick in the small cap space. Then I go Litha. Not hot. Not
hot for Simon Brown. Let's turn our attention now to, I guess, hot stock picks. Yonatan, you have chosen Sasol. Tell us why.
Well, I mean, Sasol's always been a great player. It's in a long-term bull market. We've had a three-year support line dating back since 2008. Prices have been consolidating and bouncing off the support level. Again, 2010 to 2011 had a wonderful move from the 300 to the 400 Rand level. And again, the hype around Sasol at that 400 Rand level was that it's going to go back up and test its previous highs. And that's just the time that we had an 8-month correction as far as Sasol was concerned, bringing it all the way back down to the 300 level. Again, you can see it's bounced off that support level. The 200-day moving average is flattening out, yes, but prices are currently testing that 352 level. So again, I'm looking at a much higher move for Sasol, breaking the 352 level, and again indicated by this leading indicator over here, which is the RSI, the Relative Strength Index, which measures velocity of prices. We can see that RSI has already broken out of its corresponding resistance line, which again corresponded to the price resistance line. So I'm expecting further upside for Sasol.
Is the buy trigger a close about 352 for perhaps the slightly more conservative trade?
A slightly more conservative trade. I'd like to have a couple of days above that 352 level, above that 200-day moving average. If prices can stick above that, then absolutely this is a long-term play.
Let's turn to Craig now in Cape Town. Your stock pick is Naspers. Why do you like Naspers?
Well, look, I mean, it's a story where the sum of the parts is greater than the current price of the share. It's run up quite nicely today, so you don't have to be in a hurry to purchase it. But if you look at the results from Tencent, from Mail RU, they've been very good historically, and I expect in the short term they'll still continue to be good. And MultiChoice itself, I think, is a very good story. You've seen a fantastic uptake with the digital video on demand side of the business, and there's quite a lot of parts in there which makes them very competitive in comparison to their competitors, and so I like the story going forward. Yeah.
No, it's Craig. I was just going to say, sorry, you gave me the stock this morning and it was up some 3.5%, and you're still saying worth jumping in. That hasn't taken too much of your profit. You're looking for a little more run than what we've seen.
Man, I think it was about 352 or something when I sent it through to you. The market had just opened, but there's been a lot of volatility in the share. If you can pick it up at 340, it's going to trade its way up to 380, 390, and most traders sell it out at that kind of level. And if you want to trade the share, it provides a good opportunity to do just that. But if you're a long-term holder and you can pick it up under 350, you're still not going to do badly over the long term, although it's on a high PE where there is high growth coming out of the company.